Hi, Section 24, Mortgage Interest Relief Cap, meaning that you're going to give all of your money to HMRC? You better watch this video before your property business goes pop. Hi, my name is Simon Misiewicz from Optimise Accountants, and indeed, Section 24 could be the end of your property business as you know it. You may not be aware of the impact because you've not gone into the full flow of Section 24. You may not have even done your full tax return or indeed forecasted how it's going to affect you in the future. So let's get into the details to see how Section 24 may affect you. So as the slide says, this is Section 24, property tax and mortgage interest costs are no longer allowed. That is on the year 2021. So you may not be there yet, or you may not be submitting your tax return to see the full impact of Section 24. So I want to give you where it started and how it's going to affect you in the future. So you might be interested about Section 24 in a lot more detail than I'm going to take you through today. And if that's the case, that's absolutely fine. Here's the website that you can go to look at HMRC's take on Section 24 and see how it can affect you. I'm going to give you a bit of an idea of how it can affect you, and I'm going to use my pen to talk you through it. Now, I appreciate there's a lot of numbers on here. What I don't want you to do is get stuck in the numbers, because ultimately what I'm going to show you, you've got rental income going across the top here. You've then got mortgage interest costs. So this looks like a client that is heavily geared on their property portfolio. And then you've got this other costs as well, which gives you a total cost base of £27,000. If you look across all of the years that this person's held their property portfolio, you can see that they're making very, very small amounts of profits, which we could assume from this that the client's either not interested in making profit, which is unlikely, or they are gambling on the fact of capital growth. And if they've got properties in London, for instance, and they've held these assets for a long time, then they may well have achieved that goal. But from a financial perspective, on a year-to-year basis, they are not going to be making that much money, as we can see. What I want to bring your attention to, though, is this particular graph, which says, okay, we know that the person has got £3,000 worth of taxable profit. Please note that the real profit has not changed all the way through these years at all. Forgive my squiggly wormy line that's just gone across the page there. But what you'll notice that the disallowed interest is 0% from 2016-17, which basically meant that they could offset all of the mortgage interest costs against their property income. However, in 17-18 and then all the way through to 2021, the amount of interest that's being allowed is beginning to reduce to a point that is no longer allowed in 2021, which basically means they've got to add back the mortgage interest costs, and therefore the profits that they're really going to be making in a paper format, not real profit of course, is £26,000. The real profit, let's remind ourselves here, is just £3,000. From a tax perspective, this is going to be a total nightmare for people that are already high rate taxpayers, because you should see on your chart now that this person has got a tax bill of £1,200, which is 40% of the £3,000. Now, the problem really lies of when they get this ultimate net tax of £5,800. Now, how did we get that number? You've got the £26,000 worth of profits. Don't forget, you get taxed at 40%. 10% would be lovely, wouldn't it? But 40% tax on that 26,000 paper profits that's been made. But you do get a 20% tax reducer of the mortgage interest cost itself. So you do get some relief, but basically it's half the relief that you could get previously. So ultimately the tax bill now is £5,800. That is a major, major issue, especially when you think about this particular client who has got this situation now of making £3,000 worth of genuine profits, but we have to now look at the fact that, I'm sorry, I'm just looking down, that this person has got a £3,000 real profit in 2020 and 21, and they've got a tax bill now of £5,800. So go figure, they're paying more to HMRC than they're making themselves. And this is the debate I've always had with clients is, well, hold on. Who's making the profit in 2021? Is it going to be you, or is it going to be HMRC and the banks? Is this a conspiracy theory? I'm not so sure, but I do think that the facts here tell us that the people making the money will not be you as a property investor. You do need to change what you do, how you go about it, because we could be facing another Woolworths or another Blockbusters or another the toy store that went bust as well, Mothercare recently. All these organisations that typically, I believe, have gone into liquidation because they have not changed with the times. And unfortunately, that could be you as a property investor if we do not change with the times. Now, the thing about this is there could be a compound effect as well. So you could have this situation whereby you've got the amount of mortgage interest is quite low right now. You could be getting a buy-to-let mortgage with a rate of, let's say, between 2.5% and 3-4%, something like that. Now, we don't have to go back too far in history to understand that the mortgage interest rate was 15 to 18%. That is catastrophic in terms of the amount of interest that you pay to a bank. But let's not forget, it could happen again in the future. Section 24, unfortunately, would be a compound effect because you would have the cost but not necessarily the tax relief. So imagine that your mortgage interest cost would be higher, your tax would be even higher. So you do have to be very, very careful with what's going on with the bank interest. A couple of things for you to note as well is, and I'm just comparing the 2016-17 again before the mortgage interest cost came into effect, and we've got Section 24 now in full flow in 2021. And what you'll see there is that the employment income has not changed at all for this person. But the rental profits could go from £10,000 but recalculated to £45,000. All of a sudden, their income is now above the £60,000, which means that they could lose their child benefits in total and would have to pay back a couple of £1,000s back to HMRC when they didn't realise that that was going to be an issue. We've also got this other point of being a high rate taxpayer. Now imagine that we've got Sarah is employed again, 16-17, she's got £85,000 worth of employment income. £85,000, it stays, nothing changes there. The calculation of profits does change. So again, £10,000 moving up to £45,000. What you should notice is that £135,000 is above the £100,000. Why is that the issue? Personal allowance. You are allowed to earn at least a personal allowance of £12,500 in terms of today's rates, and that would be whittled away by £1 for every £2 you earn over £100,000. Well, clearly in this example, she would have to suffer that burden of a personal allowance being stripped away. And that is a tax charge of 62%. Yes, 62%. I mean, my gosh, that is huge amount of tax that she would suffer by holding the property portfolio in the current structure by doing the same thing every single year. This is what I'm talking about, people. This is where I'm talking about. There is a meteorite coming, and you need to change your strategy in order for you to hold your property investments, but not have this meteorite that could wipe you out. And that's what could happen with these tax changes. By the way, there is going to be some videos that's coming up in the next few weeks. The first one is a video about selling your poor performing property investments. Why should that help? Well, watch that video and you will see. Then we're going to have another video a week after that, which is talk about remortgaging your properties as well. So that's going to be really key in terms of helping you to Focus about how you can mitigate the impact of Section 24. If you do have any questions at all, make sure that you type your questions in the section box below here, and I will get back to you as soon as I humanly possibly can. If you want to talk about our services to serve you as a property investor, then Optimise Accountants would love to hear from you. Make sure you go on to www.optimiseaccountants.co.uk and you'll be able to speak to Jan, our Business Development Manager, to talk about our services. If, however, you're happy with your accountancy services but want a second opinion of your tax strategy, then why not book a call with me? Yes, indeed, I'm the co-owner of Optimise Accountants and I would love to hear from you. Make sure that you load up your questions because I'd like to have at least an hour to go through your situation and your notes so that when we're on the call, we're spending the 60 minutes just talking about the solution. So you're getting more time than just the 60 minutes, but I don't want to take up all of your time. So you can use the code YouTube25 to get my call discounted from £400 to £300, and I believe I can save you a lot of tax indeed. My name is Misiewicz from Optimise Accountants again, and I'd love to see you again in the next video. Bye bye.